Hello friends, you are watching a YouTube channel about intraday crypto trading. My friends, if you just started to working on the financial markets, you've probably already noticed that stock prices on the stock exchange can change very quickly. There is no secret that quite sharp fluctuation can occur even within a day. How does this happen? Imagine that the market is a big auction. Someone offers goods, stocks, coins, bonds, futures, and so on. And someone else buys it. The sellers, of course, want to sell for more, and the buyers want to buy it cheaper. But we're taking out of the picture a lot of other indicators and factors. But in general, the price on the market is sharpened by the constant struggle between buyers and sellers. In order to make a transparency on the cryptocurrency market, we need to place an order on the exchange. The market takes into account the bids of all buyers and sellers and forms the price of the coin at that moment and shows into us in a special table called the order book or market depth. The stock market is just a list of actual bids at the present moment. That is, who would like to buy and how much they would like to buy. And who would like to sell for how much. Friends, we live in the age of new technologies. Every second, the exchange automatically collects online thousands of bids from all market. And it brings those bidders together. There are two bars in the stock market glass, several zones. The red zone, where the bids of ask sellers are shown, is the bid zone. Usually, these bids are located higher in the stock because they always try to sell at a higher price. And there is a second zone, green. That is where we show buy orders. They are called bids. There is also a neutral zone. That's where we can find the market price. There is the lowest selling price. This field is located inside spread. There is difference between the best prices of sellers and buyers. Also, in the order book, there is such a concept as market depth. There is the visible part of limit orders. Market depth depends on in the specific exchange and on the terminal. With the help of the order book, we can see the appearance of large participant. A large limit order stands out in the stock. It means that someone wants to buy or sell a large number of coins at given price. How can we use this and make money? I will tell you about in the next video. Another advantage of the exchange stock is that you can use it to determine the liquidity of a particular coin. In other words, how quickly it can be bought or sold. Thus, converted coins into the money. The more bids we have to buy or sell, the more liquid to the instrument we're looking at. In the situation of a highly liquid asset like Bitcoin, your capital is at less risk because there is a lot of people willing to trade this coin. It's interesting to the participant. Experienced traders, for that very reason, often avoid coins with low liquidity to avoid overpaying and get a better price. It's quite common to manipulate the market with large bids. It's called spoofing. It's when a big player just wants to dump the other bidders. The bid can disappear as it approaches at the price level and it reappears somewhere else. Let's analyze what types of bids exist. The first type of orders are market orders. We see them in the deals feed. With the market orders, you buy or sell a coin at the current market price. The second type of order is a limit order. You set the price at which you would like to buy or sell. And the third type of orders is a conditional or stop order. You set a stop order to limit the loss, its stop loss, or if you want to lock in your profit, take profit. This order is triggered as a market order when the price reaches a specified value. Only limit orders are displayed in the order book. Any trader can place his own order if he wants to buy or, for example, Bitcoin not at the market price, but for example at $35,000. And in the case we have to wait when the price reaches this value and the order will be triggered. But you don't know if it's going to work because the price can go up and you're out of Bitcoin. We can see market orders in the transaction feed in the form of bubbles inside of which is written the number of coins with the transaction feed. We can see aggressive sellers or buyers too. And on that basis, we can evaluate the strength of the bulls or bears. We always want to follow those who are stronger and make money. Another interesting tool is a cluster. A cluster is a zone in the order book that shows the number of coins bought or sold at different prices. With the help of clusters, we can find volume levels. For example, the price range where sellers and buyers exchange coins most strongly. Based on the volume traded, we can build the no support resistance zones, which are visible on the chart. We can use the glass to recognize robots. There are high-frequency algorithms that have been set up to perform some trading task a specific purpose. For example, a large bid that's being placed under the spread can indicate that there is a major player in the market. We can also sometimes see in the feed bids for a constant amount of coins, for example, with a frequency of 10 seconds. We can also use this fact for our own purposes. The order book and the transaction feed is what is happening on the market here and now and this moment in time. And the chart is a representation of what happening in the order book in the past. The combination of these two tools gives you a big advantage over other traders. It's especially useful for those who trade intraday and especially useful for scalpers who make quick trades based on market inefficiencies. It is also a useful tool for medium and long-term traders to evaluate the liquidity of the stock or to place a limit order by one click. I use the trading terminal from Tiger Trade. So if you are interested in intraday trading and scalping on my channel, I will be telling and showing you how to use the order book in order to maximize the benefits of trading on the crypto markets. We can connect to the terminal by APIs. Exchanges such as Binance, Bybit, OKEx scalping using order book. I think this is the best way to understand how market works. You will make a lot of trades using different strategies that I will teach you in the next video. Yes, you will have to dedicate a lot of time, study and analyze a lot, but the rewards can be very big and very satisfying. In the next video, I will tell you all about scalping using the order book. I will show you examples of trades, pitfalls and advantages of this style of trading. So follow my YouTube channel and also follow my Telegram channel where I share my result and live content. Thank you all for your attention and see you in the next video. Subscribe please.